Legends, welcome to the Daily Buyer Show, where we go through the markets every day, close and open of Bitcoin. It's the 19th, Wednesday the 19th of November, where I am in sunny Gold Coast, Australia. I know it's probably the evening or the night time wherever you are. So thank you for joining me. Let's jump straight into the charts, shall we? So we'll kick off with a little bit of macro as we usually do. Not really seeing anything to get excited about in net liquidity. We're still flat here, right? Just a reminder, or if you're joining us for the first time, net liquidity is the gauge I track for liquidity flowing into the markets. It looks at the Fed's balance sheet, it looks at the Treasury General account, and it looks at the reverse repo market to give us a signal on the flow and supply of liquidity coming into the markets. You can see here when we get these surges and these expansions of liquidity, this is what leads the crypto market and typically risk markets. Hence, we track that, and we're tracking this daily at the moment, because if we're to see some type of recovery, or if you're optimistic for a parabola in Bitcoin, best believe we need the liquidity for it, right? So we need to see that net liquidity on the rise. So we're not really seeing anything meaningful at the moment. There's nothing to get excited of in net liquidity. Looking at the DEXI, we're still tracking this cycle ending pattern. Now, what I've got marked out here, again, if you're new to this stream, I've marked out this pattern where Bitcoin tops around 280 days before the NDX. Okay, it's happened in the last two cycles, right? And look at that, 273 days, right? So if you take the Bitcoin top and then you take the NDX top, right? You take the NDX top, I think this was a flat top here. Even if you moved it there, it's not much further, an extra week or so. What's that, an extra? Let's just move it across if we think that's the top. It looks like a flat top, right? So even if you move it there, no meaningful difference. You take our first top in Bitcoin here, where we started this distribution range, and if you look at NVIDIA, if you look at the NDX tops here, you've got this 280 days where the NDX actually continues its macro bullish structure. Okay, it continues trending up while Bitcoin remains flat and ultimately is in a distribution range. Okay, so hence I've got that continuously marked up on this chart. At this phase of the cycle is always running on my computer. I've always just got this loaded, left in a tab, so I can keep monitoring it, because this is one of my primary gauges on the market at the moment, where I'm looking at the NAS because I'm tracking this signal 280 days. That would extend us out to pretty much the end of Q1, right? Which has some historical precedence there, where Bitcoin makes, tops Q4, Q1 sort of thing, makes its most gains. So hence, it's a signal I'm still tracking. And if you look at how the DEXI behaves into this same time period while the NAS is making its final move and Bitcoin's topping, you see the DEXI base, and then you see the DEXI base. I'm just going to do this with here. You see the DEXI base and then expand. You see the DEXI base and then begin its macro uptrend. Now, we've got to consider we may be seeing this happening. Base and macro uptrend. So hence, these are my mandatory screens that I'm tracking right now, and it all points to similar behavior to last cycle top, okay, in 2021. And this is what leads me on the fact that, based on Bitcoin structure, we've broken down from this key demand range before the last final expansion That was our expansion range. We'll jump into Bitcoin obviously in a moment, but just in context here, we've broken down from this demand range now. We're coming into the yearly open. Now, if we're to expect Bitcoin to have any type of parabola, okay, to come back up, if you think Bitcoin is going to create a new all-time high, well, Bitcoin needs the liquidity for it, okay? So you would need net liquidity to be doing this, because when net liquidity does this, what does Bitcoin do? It's not going into a new parabola. Hence, we're tracking net liquidity today, because if it keeps going down like this, while the DEXI keeps going up like this, we should be expecting similar behavior to this, okay? And price at the moment in Bitcoin is leading us that way. Hence, my context right now, my bias is that Bitcoin is, unless liquidity turns up aggressively, Bitcoin, whatever rally Bitcoin has, is likely to lead to a lower high, push into a lower low, okay? We'll get around to Bitcoin in a moment anyway, where we'll deep dive structure and levels, but let's just keep looking around the charts and the macro. So nothing to be too excited here in terms of, for Bitcoin, in terms of liquidity to drive new parabolas right now. All right, so yields. So the thing with yields, I'm going to mark out this March 2023 low. We've been here for a while now. Yields going down. I'm going to color this green. That's bullish for risk assets, okay? We want the yields to be coming down, which typically means we're leading potential rates down. So yields coming down historically is good for risk assets. Okay, so the main thing we've got to watch here on the yields is if this is a potential situation like this, and it's beginning a more macro trend higher, that would not be good for risk assets. Okay, I'll show you. When I say risk assets, I'm a crypto guy, so I'm referring predominantly to crypto. Okay, so if you look here, when Bitcoin begins its transitioning into its bear markets, you got yields on the rise, okay? Because this typically correlates with the federal fund rate. So let's just load that up. Fed funds. Right, see what yields does? See how it correlates with the funding, right? So if the funding rates are heading higher, best believe capital is getting more expensive, hence participants go risk off, hence Bitcoin bear market, right? Now, you can see how the market sniffs out potential shifts, okay, in Fed sentiment, and the yields can be leading this down. So essentially, we want rates to be coming lower. Rates coming lower means cheaper capital, which means more incentive for big players to take risk. So let's just look at, my concern with rates at the moment is CME. Let's go to the Fed Watch tool. Let's see where we're at, 46%. So it's slightly up. It was 42% a day ago. It was 66% a week ago and 93% a month ago. So our certain rate cut, our all but certain rate cut a month ago is disappearing. And now the majority probability is for a pause, right? If we look at probabilities, we're now potentially expecting a pause in December, the next cut in January, then potentially a cut in April, and this is changing daily, right? Which means we have a very volatile rate trajectory in still a somewhat high rate environment. We're still up here, okay? Now, even if we get that one rate cut in January, it brings us down somewhere here. Now, when Bitcoin was having these massive parabola expansions, look at where rates are. We're in low rate environments. At the same time, the Fed is printing money, QE, expanding their balance sheet. So it's not quite the recipe for a parabola, is what I'm getting to here and what I'm seeing. And it explains Bitcoin's price at the moment, because the risk markets will typically sniff out this stuff and the price action will often lead in these circumstances. So let's just clean up here. Right, so bonds, the 2-year, we're keeping an eye on that. Okay, we're keeping an eye on that trajectory. Now let's just take a look at, we already spoke about the DEXY, this $100 level, right? If this is going to keep trending up, this is a key signal to keep an eye on, because if this is going to keep doing this, as it would if rates remained high and paused, you'd expect the dollar to retain strength. Okay, that is pressuring risk assets, as well as following the historical pattern of a cycle ending. So we've got to keep an eye on that one. Gold. Gold is still in its all-time high territory, right? And usually what happens with gold is it needs to top, distribute sideways or down for Bitcoin to have a parabola. Because if you look at how gold and Bitcoin behave together, right, and I'll show you, this will make it a lot easier to see. So we got gold in black, Bitcoin in blue, right? What happens into major tops, see 2021, you'll see gold peak and distribute sideways until it, and then while it's distributing, sorry, not sideways, down, Bitcoin up, okay? Then eventually, what we've also got to be on the lookout for is eventually it creates this bottom, then it ranges, grinding up, while then Bitcoin's redistributing back into, well, I don't know if it's back into gold, but this gold tells you people are moving into the safe haven before they both dump together if we're going into a major bear market, okay? So hence, gold's still on watch for me, because there's a couple of things that can happen. Gold, yuck, I don't want those ugly candles. Gold could be good for Bitcoin sideways and down, right? If it's coming back into, even if it's just doing something like this, Bitcoin can catch a bid, or there's a higher probability that Bitcoin catches a bid based on the historical patterns. But the other concern we potentially have is if this was already the time where Bitcoin caught its bid, right, and it's now redistributing back into gold, it could mean that this downtrend is Bitcoin and gold moving into the bear market, okay? Because that's what happened historically as well. So we can't be fooled by this, just be thinking that gold's coming down, so the bid is moving out of safe haven into risk. No. And that's why we got to watch the gold, Bitcoin and DEXY together, because if you've got Bitcoin and gold coming down while the DEXY's rising, that means the bid's not going from safe haven into risk, the bid's going into the dollar. That's, get out of the market bid. So hence, gold on watch. Oil, I use oil mostly as a proxy on inflation, so I'm not seeing any concern here with oil shooting up. But the thing is, oil is also good. Typically when oil rises, I don't make much of this, I don't look at it a lot, but when oil's rising, it actually means economy's healthy and in a bull market. So, you can see when oil rises, but eventually it'll get to a point where with oil, elevated oil typically means elevated inflation. So elevated inflation means the Fed potentially needs to step in and manage inflation. And how does it do that? It does it usually via rates and contracting the economy, maybe QT, that sort of stuff. Okay. So oil, not seeing much there. Now let's get into the indices. We've had this spike in VIX. Potentially that's a risk bid because we've had this sell-off in the equities. Now, the thing I want to note here is this primary low, the primary structure is being tested here on the Dow. Okay, so we need to see what happens here, because when you get these strong closes below the daily lows, we might be seeing a transitioning structure into bearish daily structure. On the weekly, for me, when I look at this, you might be able to take a weekly down here, right? You could take a weekly there. However, because it's still under this high, I look at the structure from the point of where's the two most recent highs in a bull trend. Okay, and where's the lowest point between those two highs? That's where I like to create my key structure levels. So I'm gonna dash this one. So to me, that's more of an internal weekly high. Okay, a weekly low, I should say. So weekly still intact, but this now suggests to us that we better be paying a little bit closer attention, because the daily may be shifting and the lower time frames will shift before the higher time frames. The fact that we've swept out the all-time highs as well, typically with a major reversal signal, you'll get this happening where you've got trends, okay, and then you'll come down, sweep the high, making this the primary low, and then come down and take that primary low, okay? And the main thing we need to be watching here is this close. If it's bearish like this, it's not a sweep. See, this one was a sweep because it just wicked the level. This one was more intention to go lower. So we need to see now if the next few days, and we can watch it in the futures market, if we're getting this sort of thing happening, that would be a major signal of momentum shifting, bearish. So that's on watch. SPX, the daily low is not tested yet. Okay, we'll just mark that. So SPX is still okay. The NDX, still okay, but we got to monitor that low. Let's monitor that primary low. Cool. What's the Nikkei doing? Oh yeah. Nikkei primary lows here. The daily structure low. Right. We'll see. We've got some internal structure into this low. We'll see what this does. Right now, daily hasn't shifted and it's still bullish. Now let's see what the futures are telling us, because the futures markets have opened, right? So we want to see if this is giving shifting structure signals, right? Because the futures markets are open almost around the clock, it potentially leads what's going to be happening in the evening when the market, well, the evening for me, I know that's morning for you guys, what's going to happen when Wall Street opens. So let's see how futures play. It's still early. I think it only opened an hour ago. Futures keep selling off. That's not going to be good for Wall Street tonight or tomorrow for you guys. Same. I'm just marking out all these levels. And the RTY. Okay, so the RTY, the small caps index, this is a very good chart to track for risk, for Bitcoin, for crypto. And I'll show you why. Okay, we'll throw it on the line so it's going to be easy to see again. We'll put it on the weekly. All right, Bitcoin moves pretty hand in hand with the RTY. See? Can you see it? All right. As it moves up, pulls back, pops up. Hence, I watch the RTY closely. And to me, what the RTY is, you got to remember, I think it's 2000. It's the Russell 2000. So it's 2000 smaller cap stocks. So I look at it as a signal on the breadth of capital being deployed, right? So when the RTY is increasing, it means there's even more risk appetite. And usually that leans into crypto being even further up the risk curve, right? Okay, so hence RTY is important for us to track. Now, we're on the weekly, and the weekly low's right down here. Change this to weekly. I always use yellow for the primary lows so I can easily see it, right? And the daily, this is not good on the daily, right? The daily's been... We're kind of testing / attempting to shift. We've had this double top here. Okay. I'm less concerned about the double top. Yeah, it's not a clean sweep of the highs, but you can see the momentum loss coming in here, right? Push, fail, we've turned. So really you want this to be some type of deviation. We want to push back, confirm that we're going higher, right? Because as I just showed you, the RTY and Bitcoin typically move together, right? So if the RTY is breaking down, so if this is a sign that the market's shifting from bullish to bearish, and it's going to go like this, what do you think Bitcoin's going to do? Right? Best believe it's probably going to be following. So RTY is on watch. Everything is on watch right now. That's the theme right now. Everything is on watch. Okay? We don't come here with hopium and playing on guesses. We use the data and we use the charts. We use price action to guide us. Bitcoin, we'll get into Bitcoin in a moment. First thing I like to look at is stablecoin dominance, so USDT and USDC, right? Actually, I'm going to flick over. Let me just grab a different chart that I've already got marked up on this. Right. This is why it's important to track stablecoin dominance. So we're in crypto land now. We're assessing the macro and the crypto environment, crypto liquidity, what's going on. So I'm going to put my weekly bands on. All right. If you want these bands, just DM me on X and I'll give them to you. They're just 1221 EMAs, but I've just written a small script, Pine script, to color code them based on the bullish or bearish trend. Okay, they're really good in crypto for on the weekly time frames to gauge the macro trend. You can see here, you don't want bullish stablecoin dominance, because what does that mean? It means that capital is rotating out of crypto and into stables. So when you look here, we have this long multi-cycle trend line. Every time prices come, dominance has come into those bands, not into the bands, into the trend line, that is usually marked major tops, and that's where it's reversed. Now it's been confirmed. We're usually confirmed as a macro top or a cycle top when the bands turn green and price reverses, and especially when we break this major structure, weekly structure high, break out of this somewhat of this range and just keep trending higher, we're moving into a bear market, right? And when price does the inverse at the top, the bands confirm and turn bearish, we're moving into a bull market. Now, what do we see here? We've come and slammed into this this trend line. We've rejected 1, 2, now 3 times. The bands are turning green again. We're still in a ranging context, so they're not confirmed with a trend yet. But I'm looking at this 9% level, because if you look here, once we break this range and just keep trending up like this, we're in bear market vibes. We're in bear market territory, right? So this is a critical chart to track. And the other thing with this chart right now that is also what I want to note is if based on this weekly and daily structure, it's created a lot of headroom to come back down, okay, without losing structure, and to potentially move up like this. If stablecoin dominance starts to do this, this is going to be a massive counter trend rally, because that just means internal liquidity is coming back into the market. Now, unless it does this with net liquidity doing this, okay, if net liquidity at the same time as stablecoin dominance comes down, if you see net liquidity coming up, then we can have more confidence in an actual liquidity bid, a sustained liquidity bid into crypto that might take us to a new parabola. But if we just see stablecoin dominance coming down like this without net liquidity increasing, then that is the fuel for a counter trend rally. You got to make sure you understand that's going to be a counter trend rally that's most likely to resolve in a lower high for Bitcoin. Okay. And don't be fooled into thinking that can lead like to a new parabola. Maybe it can, but don't be expecting price discovery unless we get that liquidity bid. Okay. Because that's just internal liquidity. So that's stable dominance. Another key signal we need to be watching at the moment, and I'm sure you guys have all picked up on it now, everything has been flashing caution and signs of concern for quite a while now. So you can't say you didn't see the signs if you were tracking the right things, okay, and if you were looking at the right things. So from there, let's just look at Bitcoin dominance before we then move into Bitcoin charts. Right now, again, I use my weekly bands on the weekly chart for dominance, because you can see when they turn bearish, when they confirm bearish, that's typically a rotation out of Bitcoin, right? Now, what we've got to be cautious of here is, yes, we've seen some alt activity, and yes, this could be a rotation, but given the context, this could be a rotation into, we're seeing stable coins, right? So what we don't want to see is we don't want to see Bitcoin dominance. What a typical cycle ending signal is when Bitcoin dominance starts coming back up, right? While Bitcoin is trending down. Because that is actually a signal that capital is rotating out of altcoins back into crypto safety bid, the safety trade, back into Bitcoin, and usually back into stables as well when you see stables going up. Now, if we want to see Bitcoin have a new parabola, or if there are going to be signs that Bitcoin is going to go for a new parabola, we need to see it in one, net liquidity, but two, we'd need to see Bitcoin reclaiming some type of dominance, because Bitcoin needs to lead. If Bitcoin's not leading, then the capital is not flowing into Bitcoin. Hence, how can it have a new parabola? Okay, so you would need to see this, but that's why I just note what I just mentioned before, because if you see this, but Bitcoin's going down, then that's not a new parabola that we're leading to. That's another exit signal. Yeah, that's an ending signal. Okay, so Bitcoin dominance important. As it does this, as long as Bitcoin price isn't going down, if it's doing this, that typically means alts are gonna rally, right? It's alts pushing. So right now, the bands are still confirmed bearish for Bitcoin dominance. So we may have some fun with alts. There may be, especially if Bitcoin's going to have its counter trend rally, right? Cool. That's pretty much it on the crypto macro front. Let's jump straight into Bitcoin now. Now I'm going to flick back to chart here that I've got clean so I can chart it with you guys. All right. Now we got CME. Let's just quickly look at, I think that last gap was just filled. You know, so if there's any hopium, bullish hopium there, if you want some hopium, I'd say gap being filled, potentially a decent bounce area. All right, but let's just go into the Bitcoin chart itself. Right, now the first key level we need to make note of is the yearly open. Right. Right, so yearly open, I've got a bit of a lag going on here. Yearly open. All right, we've come down to test the yearly open, and we've caught a bid there as expected, right? You'd expect that the yearly open gets defended at least on first touch. But looking at the quarterly, this is what we've got to note. Q3 highs have been swept, right? And we're trading below Q3 lows. Now, why is that significant, and why do we need to be paying attention to this? Because in bull markets, first of all, Bitcoin does not trade below previous quarter lows, right? Sorry, it does not close below previous quarter lows. That's reserved for bear markets, right? Lows tested, never close below lows in bull markets, right? Especially not in the final parabola phases, okay? And now if you add further context, being that we swept the high, that means there was not enough demand, there's not enough buyers to push us into a new parabola. Sellers have stepped in, significant sellers have stepped in because we've lost the Q3 lows now. So there's momentum building to the downside. This only happens in major reversals, okay? So if we look back here to the 2021 top, what do? We sweep the highs, and that's your first caution, okay? Then we're looking at, cool, we didn't come down and we didn't take out the lows, right? So you still had some hope there. Now we swept the highs again. That's not good. because we've now had 2 attempts, buyers have had 2 attempts, and there's just no demand here. We've got significant sell pressure stepping in. So this only can happen when big players are offloading positions. Now here's where we start reaching levels of concern. We start taking out lows. At least here it was an SFP, but we still got a bearish candle. So sellers are still dominant, right? And here, bang, there you go. What do? We trade below and close below the previous quarter lows, indicating we're in a bear market heading into the bear market, right? So lay that as your context, and now look at how we're trading. We've swept the highs, okay? We've seen exhaustion coming into these sweeps. So we had first signs of buyer exhaustion here. We've swept the highs, and now we're trading below the lows. So yes, it's still mid to late November. So can it recover? Sure, right? I'm not in the game of speculating. I'm not a magician. And if it does recover, that would be good. But at least now we can build context from this for how we approach the markets, right? And this is a massive warning sign. If Q4 closes below Q3 lows, it sets up major weakness going into the next quarter, okay? It definitely doesn't set up the next quarter for a new parabola. I mean, anything's possible in trading and investing, but we'd need to see those other signals in net liquidity and everything else. Otherwise, you're just hoping. You're not analyzing with data, with solid thesis, right? Hope is not a strategy. It's not a plan. Now, monthly doesn't paint much of a better picture because we've got October highs here, October lows. October high swept out the past 3 months, and October lows, we're trading below October lows, okay? And well below October lows right now. So all of the higher time frames are screaming caution, and they're bearish, okay? And it actually doesn't improve down to some of the lower time frames, which we're going to get to in a moment. But this in and of itself gives you macro key levels to identify what strength versus weakness looks like and what the bulls need to do to be able to regain control. Because you best believe if we can't reclaim, first of all, if we can't just get back above the yearly open, where do we go from there? Okay, is that bulls or bears in control? Then if we get back above the yearly open, all right, and you believe in some type of new parabola, well, you best believe we need to get back above those Q3 lows, and ideally before the end of the quarter. Right? So you see how we can build context here. But right now, all these higher time frames are screaming bearish. Major shifts in major structural shifts happening at the moment. So the weekly, now I want to bring back the bands because as I mentioned to you guys, these bands, I've backtested these bands significantly across crypto, especially Bitcoin. On the weekly is where you get your macro bull market, bear market signal because you can see here, right? When the bands flipped red, we're in that bear market, okay? We go back a little bit further. When the bands flipped blue in here, okay, we're in that bull market. So how does the bands flip red? Well, price needs to trade below the bands, and once it's below the bands for a sufficient amount of time without being able to reclaim the bands are going to turn red. We are currently below the bands, and if we zoom in, we're on the verge of flipping. They're just starting to flip red. So again, it shows you how much work the bulls need to do to be able to regain control. Okay, so we've got yearly open, which needs to be reclaimed. We've got the bands that are sitting here. Okay, now we need to get into the bands. We most likely going to find resistance into these bands, and these are your areas where this is what sets up the macro short, because if we can't reclaim these levels, this is going to be the best place to be shorting a potential lower high. Even if it gets a bit higher, then we'll need to look for other signals, but our most immediate levels are here into these monthly and quarterly levels where the bands are going to provide resistance as well, because we know that we need to get back above the bands for them to be blue and to retain the macro trend. So if we're going to be rejecting from there, along with rejecting on quarterly lows, then this is a high probability area for a macro short down into these lows. And that's one of the setups that I'll be looking for. Again, we watch price as it develops, so we can say what we want here. It's all about being prepared for the levels when they come, and I've got my own systems on how I execute and what's going to get me into the trade. So there's still a lot more I'd need to see there. But this is from the higher time frame, again, building context. So we've got the bands. The bands are bearish right now, right? Well, they're about to cross bearish, so we need to get there. Now, the other thing I want to point out on the weekly is weekly structure is bearish. Okay, so we came up, created a low, weak high, SFP, right? Making this low our primary weekly low, and now we've created a lower low. Okay, so the weekly structure is bearish, and why is that important? Because now, even if the daily structure flips bullish, the weekly will still be bearish, and it has a lot more work to do. Okay, again, more work for the bulls. But it means that the current primary high is here. So for the daily to become bullish again, daily, weekly, I'm all over the joint. Sorry, legends. For the weekly to become bullish again, right now, we need to get above the all-time high. And we know how much headwind we have to do that right now. Now, the other way that the weekly can turn bullish is if we create a new weekly high that creates a new weekly low, okay, that takes out this low. Now, ideally, if you want to be bullish, when it takes out this low, it'll be a weak low, ideally an SFP or a quick deviation to get back above, right? And then because it's created this new low, this becomes our primary weekly high. So we only need to get back above here to start shifting this structure bullish again. Okay? But this is all irrelevant unless we see that price action right now. As of right now, let's mark out our weekly structure high. As of right now, the weekly stays bearish until this level, until a new weekly high is created that creates a new low. Otherwise, this is our weekly high. So weekly is bearish unless this is reclaimed. Down to the daily. All right, bands, I use them less, to be honest. I usually just use them for the macro trend on Bitcoin. Now, the daily's been bearish for quite a while, since we took out these lows, right? So the bearish structure looks like this. Okay, we haven't put in this new high yet. So these are some of the considerations we have to make. First and foremost, let's map our daily high. So we know that for the daily to start turning bullish, we got to start trading above here. Okay, so again, and look at where that high is. It's clustered right around these key levels. Hence, this is our key flip area now. We cannot be bullish. There's no reason to be bullish unless we're reclaiming these levels, and that would just be a start because the weekly's still bearish if we were to do this within the next few days. Okay, hence with all of this bearish context, this is going to be the area that I'm going to be looking for momentum to fade into, right? And then I'll be looking for that short, right? That more major macro swing short. That's where I'll be interested in it. Okay, so daily's bearish, and we need to flip that level to be bullish, right? Lots to be bearish about at the moment, isn't it? So, I mean, what else? That's I guess that's the market update. That's the outlook. Currently, we are from macro to crypto. We are leaning bearish from macro charts to crypto. Net liquidity, we're not seeing any uptick in net liquidity yet. So it's not reasonable to expect a strong bid in Bitcoin or a sustained new parabola until we see net liquidity flowing. Now, what do we need in net liquidity? What's going to drive it? Well, the formula is QE, aggressive rate cuts, okay? And the TGA spending. So the government spending, not refilling. They're constantly refilling their wallet at the moment. So if we look at the Treasury General account, which is linked to the net liquidity indicator, they just keep refilling. So when this TGA is rising, it means the government is not spending, right? So we want to see this rolling over would tell us that the government's spending again. But we'll see that in net liquidity. Net liquidity is wired to this, the balance sheet of the Fed and the reverse repo market. So we'll see that in net liquidity, right? But we need, essentially that's the formula. We need to be monitoring the Fed, because if the Fed steps in, for whatever reason, they think the economy needs to be stimulated. It could be due to the labor market. It could be due to inflation. If we see inflation plunging, I don't know. I don't speculate on that stuff. It's not my game. I'm not an expert on the macroeconomics, and I'm not an economist or anything like that. I just look at what I see in the charts, okay? And I know that if the Fed starts cutting more aggressively, as well as starts expanding their balance sheet, i.e. money printing, quantitative QE, as well as the government starts spending and draining the TGA, well, that's the recipe for a parabola, okay? But net liquidity, that indicator I built exactly to track those things. Hence why I just keep coming back to, we just need to be looking at net liquidity. Because if we see that happening in net liquidity, now, obviously, the market might start front running that, and that's why we track also price action and key levels. So we're covered across the spectrum. So if we see in the market first start reversing price action, start to give some bullish structures, then we see, hold on, the Fed's talking about expanding the economy and getting more aggressive with rates. Then we see it flowing through net liquidity, the government spending, the balance sheet, QT's ending, and that runoffs turning around, and they're potentially starting to expand the balance sheet. All of that would then swing me more towards, hey, let's start positioning for a major parabola. But right now we don't have any of that. And yeah, we do have some potential liquidity catalysts, being that we're coming into seasonality, end of the year, potential Santa rallies, maybe the government shutdown means that they'll start spending soon, and QT ending. But again, all of that speculation, unless we'll see that in net liquidity. So price action first, macro for context and as a guide, right? So the Bitcoin structures are all bearish from high time frame down to the daily. So naturally, we should be favoring shorts, and we'll be looking for short setups. Now, I do believe there is that counter trend scenario setting up. I explained it when we talked about stablecoin dominance. Okay, so when stablecoins, right, because it's got all this headroom, if stablecoins roll over like this, then that's a massive liquidity driver. Just a crypto internal liquidity driver, okay? And we should see Bitcoin in that instance. Bitcoin should have, we want to see this, ideally this yearly open holding, or wherever it finds a bottom, at some stage, it's going to find a bottom and it's going to have a rally. But given the context, like we said, we're looking at this short area, all the higher time frames are bearish. We got to expect that it's going to lead to a lower high, right? So, but the key thing is, we're already seeing that altcoins are outperforming for the most part, and select stronger alts are going to outperform, and they're going to have massive counter trend rallies. Some may even go into price discovery if they're already set up for it, but most will just be massive retraces. But in those retraces, you can get 30, 40, 50, 100% sometimes, 100% moves. Hence, I am interested in observing, I'm watching if this is becoming potentially a base that we've taken out this liquidity here. We're back at the yearly open. If we reclaim, and this is going to be our counter trend rally here, then I am interested in this alt kind of call it the exit rallies. I am looking to play this bounce, but the bigger macro positioning that I'm looking for is shorts coming into these levels potentially. And if we flip those levels and we start to show bullishness and all those other signals, we'll amend and we'll adjust and we'll find more trades then. But we've got to pay attention to what the charts are telling us now, not speculate on what we think will happen in the future. That's a good way to get burnt. Let's let the charts confirm for us. Cool. That's all I've got planned. Well, I don't really plan for these sessions. I just take you through the markets with me. That's why we call it daily bias. That's it for this session, legends. If you got something out of this, please give me a like, follow, subscribe, all that stuff. You can find me on X, where I try to post regularly, and I'm going to try and do these shows. I'll try and do them daily, but we'll see how we go. Maybe I'll do at least 3-4 of them a week. Please leave a comment, reach out to me. That's how you can kind of support the channel and support my work. Otherwise, yeah, I'll see you around.